Let me go across. Amit Khurana, head of equities at Dolat Capital, joining us this morning. Amit, very good morning to you. Give us a sense of how you're looking at IT at this point of time.
Well, the numbers so far seem to be corroborating the view, at least some of the stocks that we were highlighting, that the valuations were bottomed out and you will get some delivery somewhere. While LTI Mindtree has delivered in line with our expectations, and that was our top pick prior to the earnings, and that remains. I think the larger take is that the market's been largely concerned about the cannibalization on the AI theme and the larger pricing pressures that they're facing. So that will continue. That doesn't go away. But I guess at least the bottoming out of that over the next few quarters will give us some hope in terms of sustenance of these valuations. So we've upgraded IT to the positive stance after a period of 4 years at the start of the last quarter, and that remains our stance as of now.
Okay, and how would you therefore play the story? Where do you believe that risk-reward looks the most favorable within that IT pack, Amit?
Well, on the large cap side, as I mentioned, LTI Mindtree was our top pick. We've also taken a slightly different stance of playing the larger IT narrative. When we say IT, it is not just the pure services. We are also focusing on the software part of the segment, which we believe will be the first beneficiary of any uptick on spending. Because as these large AI-related deployments come into force, the first benefit should ideally come to the software stroke, the product companies. And there we have a preference for OFSS and intellect design per se. And of course, we like other names, which includes the e-clerks for that matter. So it's been a very mixed bag spread across large, mid, and small. But the preference to play the cycle has been at this stage through the software pack more versus the services pack.
Amit, what's the view other than crude on other asset classes, gold and silver? Do you sense that once again one could see a flight to safety within these commodities, and then thereby should gold retailers, taking a cue from the way a Kalyan Jewellers moved or how Titan's business commentary was for the quarterly updates, and gold financiers as well, of course, should one be adding positions to these names?
Yeah, I think that's a very valid question. In fact, Titan is something that we were expecting to report for some very strong numbers, which it did. The pre-earnings update seems to suggest that. But slightly on the financial side, we still have a slightly more guarded view. Our take is that most of the uptick is in the valuations, while some of these franchises have corrected very, very sharply over the last few months. But we are still not in the camp which believes these are entry points. Our larger take is that there are better domestic consumption names to play out. And unless you see the gold prices really moving up by, let's say, 20-30%, which I don't see really over the foreseeable future, these names will continue to have their own challenges in terms of growth of the business and concerns on the likely regulatory risk that you may carry. But yes, on the pure consumption on jewelers, Titan remains our preferred name, and that is what we are going with.
Amit, you have the Reliance numbers coming by the end of the week. How do you look at the numbers, and how do you trade on that stock?
Well, I think the numbers are going to be slightly on the muted side, and that's really reflecting in the way the stock has performed over the last quarter or so. And all the businesses have their own set of challenges. But I think the larger trigger for Reliance now will be the geo valuation, which will play out in the next couple of quarters. I think that will provide a certain level of support, which we believe is more or less there. So I don't see a very significant downside risk to the valuation from here at ballpark level. But I think the trigger will have to be there for Reliance to start performing. Also remember that Reliance has had a run earlier, but then it again corrected. So I would sense that these are bottoming out situations for Reliance. I'm not expecting too significant triggers from the earnings per se, but I think the larger trigger will come in from the geo valuation if at all it comes in line with the market expectations.
Kunal, let's understand what some of these pillars, and Reliance moved quite nicely all through last week. In fact, on Friday, this was one of the key contributors. Having said that, it's still pretty much in that range, circling around 1300 thereabouts. Do you see a big move in the stock ahead of its numbers on Friday?
Well, Reliance is one of the mystery stocks, Aisha. You can't really judge the stock prior to the result based on the built-up of positions. And I've seen this multiple times for the stock price, that it just doesn't give any kind of a a sense or a tilt in terms of data point that which side the traders are expecting. We've seen many a times that the real moves for Reliance Industries happens when the results pan out, and if there are positive surprises or negative takes from the results per se, that determines the trend for the stock in the near term. And many of the other times we've actually seen that the stock again comes back into a shallow kind of a trading range even post the results. So it's very difficult to try and comprehend the move for Reliance Industries. Even in the last, I think, 5-6 days, when you look at the cumulative price action, the stock has actually formed a flattish doji kind of a pattern for the last, I think, 3 or 4 weeks consecutively. So which means that the intra-week movement for the stock is, say, a broad 3%, 5%. But the closing for the stock on the weekly basis over the last, I think, 4 weeks consecutively has been absolutely flat.
Okay. Amit, if I were to also quickly have your take with regard to some of the retailers. Trent was one of the big casualties last week, 13% lower, top loser on the Nifty 500 index, Nifty 50 index. But give us a sense, even DMart's numbers came out. How are you reading through the numbers there, and how are you looking at Trent, both in terms of valuation and risk reward at this point?
Well, yeah, so that was one particular sector where we were anticipating a much better performance. I mean, both Trent and DMart were in our preferred picks universe, and Trent in particular was a bit of a disappointment. Our sense was that based on the channel checks that we were doing, that the competitive intensity was being far better managed, and the competitors were not probably able to scale up to the same extent as Zudio was able to. Also, the fact that Trent had its own challenges over the last 4 or 5 quarters on sourcing, on the store performance, and all of those issues were looking like they had gone past those issues and would probably post a better number. But having said that, I think the valuations have corrected very, very meaningfully. They are no longer in the zone of 80-90 times. It's a far better earnings multiple now that we are looking at over the next 12 to 18 months. So we are still maintaining our conviction. On DMart, again, numbers slightly muted side. But I think the overall store additions and the throughput should shape up pretty well second half of FY27 and gives a pretty good visibility for FY28. So we are retaining a stance on positive side for both of these names.
Okay, let's address some of the other newsmakers, and Meryl is here with that list.
A very good morning. Yes, let's now take a look at some of the stocks which are expected to be in the spotlight today. Starting first with oil market companies, which could see a lot of buying interest after Brent crude prices have surged nearly 4%, reaching $79 per barrel. Now, higher crude prices, however, could mean a negative for paint makers, the likes of Asian Paints, and also stocks like Interglobe Aviation, where both of these sectors see an indirect correlation with crude prices. As for them, it means higher input costs and fuel costs as well. Another stock in focus is Good Luck India. The board has approved a 2-for-1 bonus issue, meaning that every shareholder of the company will receive 2 bonus shares for every single one held. Also in focus is JSW Energy. It has secured orders worth nearly 444 crores from Bondara Renewable Energy. Now this is for the supply of battery energy storage system, or BESS, and also for the power conversion system solutions, providing a positive trigger for the stock. On the flip side, Keystone Realtors have reported a weak operational update this time around. First quarter pre-sales for the company have fallen up to 42% on a year-on-year basis, reaching 617 crores from the last year's figure of 1,668 crores. Fino Payments Bank, on the flip side, has posted a healthy business update. They've seen new account openings rising 31% year-on-year, reaching 3.13 lakh, while average total deposits for the company increased 11%. And finally, IdeaForge Technology is another name which we're going to watch closely. The company has successfully closed its 500 crore QIP, issuing shares at 795 rupees a piece, a 4.9% discount to the initially maintained floor price. So yes, these are some stocks that we're expecting to see buzzing in trade today.
Okay, thank you so much for that, Meryl. Kunal, let me come to you. Trent in particular, the 13% knock on the stock. Do you go out and buy at this point? How are charts looking?
Yeah, the charts, long-term charts are still better for Trent relatively. But I think after this last week price correction, I would be just waiting for another few percentage points in terms of a drop for the stock price. The nearest support which we see for the stock price on the short-term charts and comparatively over the last 4 to 5 weeks is around 2700, 2750 levels. And the major support, of course, for the stock from where it turned around, price adjusted, is 2200 mark. So the initial support level which you're looking out for is around 2700 levels. We'll wait for at least another 150 points kind of a drop on the stock price. If it happens, say in this week or in the next 2 to 3 weeks, that could be a better price point.
And Amit, the other one, which was a bit of a calamity of last week, was Dr. Reddy's. Do you go out and buy this 10% kind of dip through the last week?
Well, difficult to take a very tactical call at it, but you need more clarity. While the stock figures in our preferred picks list, we're essentially put it on the review pending the earnings, which I believe are due this week. So I would refrain from making a very strong judgment about it. I think we have to wait and see as to how much the impact will be and what is the sort of write-off that they take. So till that time, I think we'll hold back.
Amit, how do you look at some of the pharma companies which have a domestic focus? Because if you look at some of the IPM data which is coming up, it's up 16% YOY in the month of June versus 12% last year and growing on a 1% month on month. So the healthy number and healthy growth coming in the domestic market for many of the companies focused on India or domestic market there. How do you look at that, some of the companies?
Yeah, so that's been our preference. Essentially, we've been playing that through some of the mid-cap names, and in particular, Ajanta Pharma has been one of our favorites. Of course, the domestic business apart, the global business also should have a better trajectory now. But yes, some of the domestic names have done pretty well, and we've been essentially playing on that theme for the last 2 quarters. I must also say that the performance has been far superior and far better on the overall volume trajectory and the ability to sustain prices. So that has come out as a positive surprise. We've been playing it through Reddy's on the large cap, so to say, and Ajanta on the small cap side.
And from a defense point of view, I think you mentioned about BEL also. How is the BEL and BDL combined, these two stocks looking?
Well, BL is our preferred name there because the visibility on the pipeline is pretty strong. While the expected award of the orders has not come out as anticipated in Q1, but eventually we believe this will play out over the next few months. So visibility is not a challenge, and at the current valuations for the kind of ROEs and the cash flows that it is throwing, we find that at a very, very attractive level, very low downside risks from here. And over the next 2 to 3 years, it can deliver much higher growth, is what our sense is. And that's where the preference lies for us.
So higher growth, BEL, BDL. Kunal, what's your view?
See, I think BEL is the one which is, so both of them are very distinct charts. BEL, of course, is the one which is low beta, more solid in terms of the price trends and structures. We've seen the stock managing to absorb a huge part of the market volatility in the last 3-4 months or so. Even in 2025, the stock largely remained into a very positive tilt for itself. BDL, so for example, just to give a context over here, that Bharat Electronics, the charts for this is still trading above 400 levels, much above its long-term moving averages, and taking good supports at every price corrections for the stock. Compare this with BDL, which has been a very volatile stock. The stock is considered to be high beta. It's trading below the 200 moving averages. Even recently, for example, in the last, I think 1 or 2 months, there were 2 moves or 3 moves for the stock price where the stock corrected and there was a V-shaped recovery for the stock by magnitude of 15% to 18% for Bharat Dynamics. So completely 2 different kind of charts, and that's why I think traders who have a slightly higher risk appetite, they would want to try and venture into those high beta stocks. For them, Bharat Dynamics is something which looks very attractive, specifically around the 1300 kind of a territory, which seems to be a decent pivot support for BDL. Bharat Electronics, on the other hand, should be considered for investors, traders who are generally on the slightly risk-averse mode, and closer to 400 mark, I think is a huge support for the stock on the long-term basis also.
Okay. All right. Goldman Sachs as well has come out with their India strategy note. And what they are saying is Nifty target 2027 is 26,500. 10% upside from the current levels is what they are seeing, at least at this point. What they're saying is the India outlook has improved, lower commodity prices, stable currency, resilient domestic growth, and healthy Q2 expectations, at least going forward. Ultralight foreign positioning is also expected to kind of behave as a tailwind. I mean, what you want to really look for is their top picks, and financials is one of the big picks which they've made. Amit, what's your take? A slew of Nifty 50 banks will come out with earnings at the end of this week. How are you looking at the BFSI segment and your favorites, sector, stock, if at all you can give any?
Well, banks actually have been a bit of a damper every time we hope that they will start performing. They have not really come up to the expectation. I think one lead signal which is probably giving us better hope this time is the credit growth, which is trending very nicely towards mid-teens to some of the cases even higher teens. Some of the banks reported that number. The concern was that liquidity was pretty tight and therefore a risk of rate hike eventually playing out. I think the FCNR flows should take care of that. And because that's going to be a very substantial sum of money, that should also aid in overall defense for the rupee, which was the other concern that one was facing in the first half of CY26. So if in that backdrop, we do see closer to, let's say, between $40 and $50 billion of FCNR flows, and that money goes into the system, provides the much needed capability for the banks to start lending much more aggressively or much more in a healthy manner. So I think the take is the valuations are pretty attractive. We've been backing up private sector banks, and our take is one is the HDFC Bank, which is more of a contrarian preference at this stage given the market concerns. And the second has been ICICI Bank. Coincidentally, this is also a phase where we are seeing significant leadership churn across all the large financial institutions in India. And it will be interesting to see how the new leadership evolves and shapes up to drive the growth for the next 2 to 3 years. So that's another very, very important element, which we believe will lead to some of the names outperforming while others may not up to that extent.
Okay, and pharma companies, they're in focus as the Indian market grows 16% YOY for the month of June. The Indian pharma market, by the way, IPM. You're looking at domestic demand remaining robust with broad-based double-digit growth. Meryl here with more details.
That's right. The Indian pharma market has once again sustained double-digit growth in the range of 16%. Now, this growth came from 13.3% value and 2.3% unit growth, which was observed in the month of June. Overall, the market also grew on approximately 1% on a month-on-month basis, with the primary growth drivers for the Indian pharma market being price at 5%, volume at 3%, and new product launches also up at 3%. On a year-on-year basis. Now, the key therapy trends driving growth for the Indian pharma market as a whole remains chronic therapies at the top place, registering a 20% year-on-year growth. Now, chronic therapies has been a strong growth driver for the Indian pharma market so far. Urology and anti-diabetes are also up there, registering an approximately 18 to 20% growth as well. Key underperforming therapies, however, include anti-infectives, gastro, and derma. All three segments lagging the broader IPM growth less than the 16 to 15% that we've seen. Now, the fastest growing companies are, this is an important region to highlight. 8 out of the top 15 companies in the Indian pharma space have grew over 1% faster than the broader market. Now, the top names over here are Zydus Life Sciences, Torrent, and Cipla. All three registering about an 18 to 20% growth over the last year's growth as well. Now, some key trends that we have observed in this June data, starting off first with the blockbuster semaglutide, which was expected to be a very big trend for the Indian pharma market. Now, this growth has been seen plateauing, or in fact even slowing down. Generic semaglutide volumes have slowed down in June, and the outlook as well has been revised downwards. The outlook for the Indian pharma market's growth, however, has been revised upwards, with a few key pharma stocks in focus. These include, of course, Zydus, Lupin, we've got Torrent Pharma as well. So these three names look very well placed in the Indian pharma market going forward in the near to mid-term as well.
Okay, thank you so much for that, Meryl. Again, some stocks which have been buzzers, and Kunal, give us your view. Godrej Industries and Info Edge, both of them moved 16 to 17% all through last week. Give us a sense as to how you look at both of those names.
So I think both these charts are quite distinct. Godrej Industries, for example, the stock is trading at a multi-week high. There's been a phenomenal move for the stock price. We'd seen a point where Godrej Industries, I think, had fallen down to as much as 750, 800 in the very recent past, and it's come back towards breaking the 2025 highs of almost 1350, 1400. So after a 40% plus kind of a correction, the stock has managed to surpass or come back to that starting point in just a matter of, I think, 2-3 months or so in the recent past. So the charts for Godrej Industries are very, very strong, and it indicates that the corrective wave which had started off in 2025 mid for the stock price, that's easily been absorbed by the markets, and we are looking at a potential possibility of the stock continue to look very attractive on the long-term chart. Such are the kind of names which generally perform very well on the medium to long-term basis, much higher than the average CGR for many of the other mid-cap names in that category. On the other hand, I think Info Edge, the stock has come back towards a very good recovery from its major lows. The stock was struggling, to hold itself in the last, I think, 6-8 months of correction, price correction. We've now seen Info Edge to try and come back from 1,000 levels to almost 1,200 plus where it's closed right now. It's still far off from its 2024-25 highs of 1,800 levels, but I sense that after the last 2-3 days of up move, I was looking at the data, the jump in delivery volumes for the stock price, the base now for the stock is almost at 1,080, 1,100 mark. So I would sense that this could be a good stock to keep on radar, especially for the ones who are trying to eye these kind of stocks which are coming back into good revival phases.
Okay. All right. Thanks for that, Kunal. Let me go across. Amit, in terms of earnings, L&T Finance was the other one where the numbers were extremely strong. I don't know if you track L&T Finance in particular or have a pulse of the numbers there, but give us a sense of it if you do, or if not, then the NBFC pack. What are your top preferences there?
Well, we don't cover the stock. We didn't have a view on the NBFCs per se, but yes, the numbers I think are going to be reasonably well placed for most of the frontline names. I think some of these might actually surprise on the positive side. Our concern earlier was in terms of their ability to maintain their NIMs or the likely impact on inflation, and that leading to the impact on the book per se, the quality of the book. I think that seems to be holding on pretty well, and the concerns on the macro front have also sort of tapered off. So largely, I think NBFCs will come back, and as the system liquidity turns a little better, they will be in a position to sustain their NIMs. That's the big picture view we have at this stage. But we're preferring to play the banks versus the NBFCs as of now.
Okay. Let me also bring on board Chandan Taparia of Motilal Oswal. Chandan, great having you this morning. What are the levels you're looking out for today and for the week, Chandan?
Good morning. Thanks for having me. So the broader trading range for Nifty may be in between 23,800 to 24,400, because that is the trading range which the market has been respecting from last almost 18 days. Supports are there near 50 DEMA, but multiple hurdles are there near 24,400, 24,444. So I believe that again the range bound bias could be there, but as the immediate setup is slightly turning upwards, so buy on decline can be utilized. So use the support near 23,800 to buy any decline towards 24,000 marks. Looking at the data setup, we have seen surge in the put call ratio, India VIX at lower levels. FIs long short ratio slightly improved, and FIs are turning net buyer to the index future. So that is a good part. And talking about Bank Nifty index, here after the negative opening, if it manages to hold near 57,500, then buy on decline can be utilized for a bounce towards 58,000 to 58,250 marks.
Right. So, Chandan, what do you think the sectoral composition within the large caps is going to look like? What do you think will drag down, and what will manage to stay resilient?
Yeah, so this market is going to be very focused on the stock specific, and the selective counters from the selective sector will do well in this scenario. If I look at the sector wise, I believe the Nifty Pharma can do well, but entire pharma stocks may not perform well. Selective pharma name, whether we look at counter like Lotus Lab or Apollo Hospital, will do better than other name, including a counter like Sun Pharma or Dr. Reddy. So in pharma, we have to be very selective. In counter like Apollo Hospital or the Glenmark can be the bottom out. If you look at the capital market theme, stock like CDSL and AB Capital can do well. If you look at the wire and cable, I think support-based buying could be seen in the counter like Polycab and the KI. In financials, we'll focus more on the counter like Bajaj Finance. So it's going to be very stock-specific theme rather than looking at the entire broader sector in the market perspective at current juncture.
Amit, I'll come back to you with regard to the realty pack. It's had a phenomenal run last 3 to 4 months. How are you looking at it now in terms of risk reward? Can the up move sustain?
Well, again, no official stance here, but yes, the numbers have been relatively better. One thought that there will be an impact in terms of sentiment or the margins or the other visibility parameters, but that has not really showed up. My sense is that some of the pockets continue to drive, see very, very strong demand driven by consumption. And while there was concern that will they be able to sustain their margins, it seems so. The guidance seems to be on that front. So overall, I think good times. We don't have an official stance on any of the picks there. We don't have any, but it's a pseudo discretionary sort of a segment which can also have an impact on the other categories that we are covering on the positive side.
Okay, interesting. That's the take coming in on realty. Curious to know, Chandan, how is it that you are mapping the moves within realty? Because once again, the sector has surged quite nicely. In fact, from the March lows, it's done pretty well.
Yeah, so we are positive on the Nifty realty sector. In fact, in the relative rotation graph, this sector is quoting at a leading quadrant. That means strength and momentum both are visible in this sector. If I look at the price behavior of last 1 month, it has rallied by more than 13% and has been making higher tops, higher bottom. It surpasses falling supply trend line on the monthly chart as well. And most of the counters in the reality pack have seen short covering and now adding long build-up. So I believe positive momentum could be there. Only problem is like most of them have rallied by more than 15 to 20%. So risk reward ratio might not be favorable, but any decline due to the market volatility can be bought here. If I look at the LODA, I think any decline towards 1200, 1180 can be bought with support of 1150. And this counter can head towards 1250 to 1280 kind of level. Oberoi Realty also looks good. Already it has seen a consolidation move in last 3-4 days and higher base is being formed with support near 1840, 1850, it can head towards 2000 kind of level. So the entire sector looks positive, but already rallied well. So risk reward ratio might not be favorable. So better to utilize any decline to buy to continue to be with the momentum of the sector.
Amit, in terms of the power financiers, how are you looking at those? IREDA, PFC, REC, and the like?
I think these are more stock-specific issues because you have a pending merger there which will play out, and we need to wait and watch as to how it's in terms of timelines and other aspects. But largely, I think it's more of a neutral stance that we have currently at this stage. In fact, we are playing more on the producer side of the powers rather than the financier side. There's also been an overhang on the spending, especially at the state level, and that has kept us slightly on the more defensive mode there in this particular segment.
Okay, that's the take coming in on some of the power financiers in particular. But just looking at the market in trade on Friday, and on Friday at least, some of those EMS plays, after having a very, very stupendous run-up, the likes of a Keynes, Dixon, etc., they did see a little bit of a cool-off play out. But Kunal, how do you map the charts in particular for Keynes, which saw a bigger move of 4% of a downtick on Friday?
See, I think what happened was day prior to Friday, the stock had actually given a kind of a breakout for itself, but then the stock entered into the ban on the F&O side, and that's one of the reasons why you saw the stock on Friday seeing that sudden withdrawal or correction in terms of prices. I would sense that this is more of the technicality for the stock price where it's gone through a sudden correction. But if it manages to come back and break past about the Thursday-Friday high, which is I think around 3,450, 500 mark for Keynes, I would sense that the stock could be ready for a breakout yet again. So maybe I think over the next couple of days, you might see a kind of a muted price action, but the level to watch out for in terms of a breakout would be 3,450 mark.
Amit, the other set of stocks which were in focus last week was on the platform companies. Swiggy, Paytm, there were some sharp moves on some of those names. Now, fundamentally, would you play any of these names, any of them looking good?
Well, yeah, we will have preference, a bias, so to say, in favor of the fintechs rather than the quick commerce companies. We think that they are probably not being as well appreciated by the market. So Paytm has been our preferred picks all through. On the quick commerce, in fact, we have a negative stance on Eternal because we continue to maintain that the current valuations are building in very, very stupendous level of growth, which seems to be slightly of a challenge in our view. So therefore, we are playing more on the fintech side of the internet businesses as we define them, digital businesses as we define them, versus the consumption basket, the quick commerce part of it.
Okay, understood. Amit, great to have you in the studios today. Thank you so much for your time.